Tax hikes, pension cuts and rising joblessness. A decade of austerity and stagnating growth has left Greeks angry. The government's had a tough time too, walking a tightrope between its lenders' demands and the people's needs. But now, the European Union and the International Monetary Fund say the economy is finally back on track.
The signal is clear and massive, is that Greece has fulfilled its commitments towards the European Union and the Eurozone. It is that the reform process is ongoing. It is that public finances are now sound and under control.
And for Prime Minister Alexis Tsipras, this means Greece is ready to turn a new corner.
After a long period of disastrous recession, the Greek economy is transitioning to a period of dynamic recovery, of growth and regaining trust.
Now that its biggest lenders are satisfied with Greece's books, the government wants to return to the international bond market. The 5-year bonds Greece plans to issue are expected to offer a 4.75% return to investors. That's 20 percentage points lower than the yield offered on similar bonds back in 2014, the last time Greece went to the debt market. The government says it's already received orders worth more than $8 billion. But the economy isn't out of the woods just yet, and analysts say the bond issue is just the first step on a long road to recovery.
The timing could possibly be a bit risky at this phase, but at any rate, the whole undertaking will be judged from the result. We hope it is part of a general framework strategy for the return to markets. We would have preferred that it was not so premature, that there had been more privatizations carried out, and perhaps a wider margin for the third review to have been completed.
The EU's vote of confidence has not come easy. Greece has promised to continue raising taxes and cutting benefits for years to come. The government will soon borrow more money. How it spends it will decide whether the Greek tragedy ends or worsens. Mobin Nasir, TRT World.
So let's get more on this now from TRT World's editor-at-large, Craig Kapitas, who's in Paris. Great to have you, Craig, as always. So, a successful bond sale for Greece. The investors are happy. But is Greece any better off economically today than it was a year ago?
Successful, Azar? My God, you know, Jimmy Choo could only dream of a deal like this. You know, in my next life, I want to come back as the bond market. You can intimidate everyone more than a Jimmy Choo stiletto
Wait a minute,
deal.
wait a minute. Hang on. Back up there, Craig. Really, you want to come back as a moneylender in this day and age? Look, what are the choices you face? You can either lend to a safe bet and earn a pittance, or you can buy some fairly dodgy assets for any kind of reasonable return. That's not much of a business plan, is it, Craig?
Azar, you're being grumpy today, my friend. Listen to this deal, okay? Okay, the Greeks issued a $3 billion 5-year bond, or 3 billion euro. The demand exceeded 6.5 billion euros. The Greeks had to turn away investors. That's real successful. Let me repeat that. Greece had to turn away investors. This is remarkable by any standard. Now, look, let's step back here because I honestly believe a lot of our viewers aren't familiar with government bonds. Let me explain. Governments and large corporations issue bonds as a way to borrow money from a broader range of people and institutions than just banks. And what this bond does is it embodies a promise by the Greek government to pay 4.625% of the offering every year for the next 5 years to whomever owns the bonds. Now, these bonds, believe it or not, are getting a better yield than Mexico and Iceland. That's something to write home about.
I don't know, Craig. I'm still not sold. You're not convincing me. You're not convincing me. But look, the big question remains, though, how is Greece going to dig itself out of the hole that it's in, both in terms of its debts and in terms of fundamentally, how is it going to grow its economy?
Well, these are all good questions. You got unemployment stuck at close to 22%. You know, the Cyprus government has dubbed this sale as the beginning of the end of darkness. What this means is the Greeks are back at the poker table. You know, now they still have a $341 billion debt burden. You know, and the way bonds work, the reason people bought these, Azar, is the government and the issuers are hoping that investor interest can trigger economic recovery. That's why they're looking for this, and that's why this heavily indebted country spent some 78 million euros of taxpayer money plus fees on this switch and tender that they've done. And why have they done this is Greece can now go back and say, we have market access. And if you want to be in the global poker game, you have to have market access. Greece did not have that until today, and they're funded through 2019.
Yeah.
That's what this is all about.
Yeah, I'm off to the ATM right now. Not. Craig Kapitas in Paris. Thank you so much.